can we identify the trend? So first of all, the trend will depend always in the time frame that you choose. So if you choose a weekly time frame, which is the case that we have here, if we choose a weekly time frame, we can identify very easily the trend. So we can see from the bottom left of our screen to the top right of our screen, and that indicates the momentum, the trend for this market. Another way to identify the trend is to identify the highs and lows of the market. So we have the previous highs, and then the market keeps trading keeps printing higher lows, as we can see. So, and this is how we identify the bullish trend. So we can see there's a established momentum to the upside on a weekly time frame for the dollar versus the African rand. So that being said, if you decrease your time frame into a daily, you will see a different chart. The same momentum, it's there, of course. There's not a huge difference between the weekly and the daily time frame trends. So we have a clear upside momentum also on a daily. And if you go and if you zoom into the most recent piece of data, which takes into consideration this previous low and the recent highs that we are now trading at. So we can also identify those higher lows, identifying the bullish trend. Higher lows, higher highs, eventually a small period of consolidation, but then you can see the price keeps printing new higher highs and higher lows. Okay, so we have the clear indication of momentum, in this case to the upside. So this is a daily time frame. You can see clearly the momentum. So if you start to decrease your time frame and you start to zoom in into a specific period of time, you can see that there will be some periods where the market trend to the downside, or let's say it trades to the downside. That means, which means that the previous momentum to the upside was broken, and at some point the market starts to print lower lows and lower highs. Okay, at some point it will reverse again, but as you can see, we have a higher time frame momentum to the upside, and at some point this downside correction, this is a correction. Okay, we have a bullish momentum to the upside, so there will be periods where the market starts to print a retracement. We call those retracements a correction. And that being said, after that correction, after that period of consolidation of a correction, we will see the market squeezing higher again, so trading higher again, and printing higher lows and higher highs, identifying the momentum, a new momentum to the upside. So, but if you zoom in into a specific period of time, you can see the market will sometimes trade to the downside, and that will depend the time frame. If you go into a 1 hour time frame, of course you will zoom into very specific pieces of data, so blocks of data. You can see momentums to the upside, and then the price starts to correct, and that's always the same. The market will not move in one single direction all the time. The market needs to correct, and it doesn't matter the time frame you are using. If you go into a 1 minute time frame chart, you will see the same kind of a behavior. So you will see momentum to the upside, small corrections, small periods of consolidation where the price moves nowhere and moves sideways. Okay, we will see periods of similar to this one, and then new momentum to the upside, a correction, and that's how the market moves. You can see there was a big swing to the downside, and now we are correcting to the upside. So if the price decides to keep trading lower, that may shift the trend. So we are in a bullish momentum in a 1 minute time frame. If the market starts to print lower lows and higher lows, the momentum will change. So, and we'll call this a reversal behavior. Okay, so in that, I believe it's a simple process how to identify the trend. And as I said at the beginning of this video, it will always depend on your time frame and your horizon. So if you are a long-term trader, and if you search for positions to hold for long periods of time, probably you will take into consideration the higher time frames momentums, like a monthly or the weekly momentum to the upside in this case. If you are a day trader, probably you will go into a lower time frame, probably into a 15 minutes, 30 minutes time frame, and you will take into consideration not only the momentum but also the patterns the market forms, and you will pay attention to a specific period of time and specific periods, specific data in a specific period of time. That's correct. So that being said, I hope that helps you how to identify your trend, your momentum. Of course, there will always technical levels where we will start to consider the potential reversal, but that's another subject for another video. So I hope you enjoyed this small approach how to identify the trend in your charts depending on your time frame. That's all for today. I hope you enjoyed. Big for you, a lot of success, and see you there.